Well, welcome to Plain Talk. I'm here as usual with my partner, Matt Gomoll. And Matt, we weren't exactly sure what we were going to talk about coming out of the last one. And lo and behold, there's a lot of things to talk about. So what's on your mind today, my friend?
Yeah, so I mean, a lot of developments since we spoke last. Two things that are I would call related. We've got the kind of showdown over Greenland that went on last week, prominently at Davos at the World Economic Forum. So that's part of it, and then the other is the looming government shutdown. If the government does not make a new spending bill and pass a budget, we might have a shutdown come Friday. So those two things are related as it comes to confidence in US dollars and US markets. And I think it's kind of appropriate to just kind of frame that whole thing and talk about it today.
Yeah, let's start with Greenland, obviously. So, you're usually much more schooled on this than I am, but this might be a time when what we're talking about today, the confidence in the U.S. and what we're doing, where the bluster may backfire a little bit. I mean, at the end of the day, there was a lot of bluster, and then it came out like, yeah, and we all knew. I mean, you and I both knew they weren't going to strike the military at Greenland. There's like 66,000 people there, right? It's not that's not a fair fight. But there was a lot of bluster, and then when you listen to both sides, like we got a deal, and it's like, yeah, that deal's kind of been in place. Like we've always had the
Mm-hmm.
ability to build more, more posts there. So, what's your kind of take on that?
Yeah, so it's hard to read into what is a negotiation tactic where you start with a maximalist position and ask for the world and then back off, or what is I've gotten pushback, so I'm backing off. You know, Greenland absolutely makes sense strategically if we're worried about the control of the Arctic and Russia and Chinese activity up there. So I get that. But again, like you said, we have basing rights. If we wanted to put missile defense up there or more naval assets or whatever, they wouldn't stop us. So what it kind of comes to is, when I look at it from the perspective of last year, we had the tariff blow up in April. A lot of countries kind of got put on blast, and it, really threatened to rework, trade relationships in the world order. And it did it. Everything kind of came out of that okay. I would say, despite the tariff threats, the US came out still closely connected to certainly Europe. A lot of other trading partners made new deals. And it was like, okay, that kind of went through and was okay, without anybody saying we need to rearrange our trade agreements and find new trading partners outside of the US, right? That was the concern in April of, are we going to lose access to markets? Are people going to stop trading with us? And it all worked out okay. And then you fast forward to last week and the blow up over Greenland, and you see Canada say, I don't know that the US is a reliable partner. We're going to go make deals with China. That's concerning insofar as, like, we want the US market and the US to be the dominant player on the world stage. But we can risk going too far and pushing our partners away and forcing them into the hands of somebody else, like China. And so that's the kind of concern that comes along with this.
I don't know, Matt. My concern is certainly what you just said, but it's not Canada. I think that's bluster too, right? I think
Yeah.
Canada's sitting there go, we'll go to China. No, you're not, right? I am worried about other countries doing that. I'm not worried about a lot of the developed countries doing it, but I am worried about the emerging countries and some folks out there that say, you know, we don't look that much different societally than they do, right? Like Canada looks like us. A lot of the European countries look like us. The ones that are kind of on the precipice of coming along are the ones that, if you give too much disrespect, there's a real threat there. I don't think there's a threat. You and I've talked about this before. There's the bluster of, we're going to take away the US having the world's reserve currency. I don't think the big players are any more trustworthy than we are. In fact, one thing that's come out with all the noise around the Fed is it's pretty independent, right? It's almost proving itself through the bluster, but I definitely think that those issues exist with some of the up and comers and the fringe countries out there, where that can be kind of important. I will say on Greenland, I guess I've been confused on. I don't think it's the worst thing. Like I actually think it was the approach was bad, but we have other territories. We have other territories that we have out there, so that's not new. Um, it was. I think we've landed on something that it's like, but this sounds like NATO, right? It's like we're fighting NATO. It just sounds like NATO, like we already kind of have that.
Yeah,
So
I think the whole thing was a. It seems like it was a gambit to make a move on something that if they would have bit, great, we'd have a new territory. They didn't. They pushed, Europe in general pushed back pretty hard, and kind of you found the limit. It's like, no, that's not acceptable for Europe. Um, yeah, the dollar dominance in the U.S. dollar reserve currency is always on my mind. I don't think most Americans appreciate enough the unique position that puts us in with, for better or worse, we can print money and people are going to consume it. Like people around the world will buy up more treasuries. We can continue to issue debt to fund our government obligations, which, yes, government spending can be out of control, but I don't see anybody reining it in anytime soon. So it is a bad day when we don't have that ability. And that, the pricing of our bonds when people are you know, less desirable, then that pricing goes up. The value of a bond falls, the yield on it goes up, the interest rate we got to pay everybody goes up. That's not a great situation to be in, because that's government payments that have to be made, and also the government interest rates affect our interest rates in other mortgages that we use.
yeah, and a topic for another day. I am a fan of Scott Bessent as Secretary of Treasury, and he actually, one of the things he's identified is all the things you're talking about. Um, there's what he would consider some mismanagement on the Fed, and we're paying more than we should be paying because of the way they're not exchanging some things in and out as they're selling or
Mm-hmm.
buying things on their own balance sheet. So it's a great segue into things like budget and the world in my lifetime. I'm 58 years old, and the move and how fast things move, particularly on 24-hour news cycles. 2 or 3 weeks ago, I would have told you there was so much leverage for the Republican Party, and this budget would just kind of, there would be a lot of pressure on Dems. And I think if Homeland was doing what I read today, like Tom Homan basically, apparently he's a guy who's been sitting in the background going, I want to do this targeted thing that the president talked about. And he kind of got outvoted for a while by Stephen Miller and Christy Noem going, no, we're just going to, napalm the whole area. But
Mm-hmm.
the Renee Good thing was one thing. This week, this one was because now you have people on the right because they're hearing the gun thing now. And there's, the government is this administration saying, well, you can't show up to a protest with a concealed carry. It's like, well, I that's exactly the Second Amendment. I absolutely can. And so they're losing both sides of it. And today, 10, 12, different Republicans coming out really down on this. And so now a government shutdown, I wouldn't have thought it was likely. And now I'm sitting here going, I think it's highly likely because this is the leverage for the Dems, and they have a lot of Republicans going, you've gone too far, and they're going to hold this DHS budget over that. What are your thoughts?
Yeah, they don't need any they don't need any Republican defections in the Senate because you need 60 votes to pass it, I think. And so, but they're definitely going to get some. And it's just an opportunity, unlike the last shutdown in October, November, which was, they tried to frame it as medical spending and, the getting the Affordable Care Act subsidies put back in. Wasn't a super galvanizing issue for Democrats. This, funding towards Department of Homeland Security, immigration and customs enforcement, it's a lot more salient. It's all over the news. It's visceral. So they've definitely, have a cudgel to beat the Republicans over the head with in the next week.
And you grew up in that area of the country. You're from Wisconsin, and so you're from a neighboring state. I've been a lot of places, and that's I think what people on it, like when we talk about the news and what they're putting out there, and they always talk about the coast. Like a Minnesota Democrat doesn't look like a Massachusetts Democrat or a
Hmm.
Southern California Democrat. A Minnesota Democrat looks like a moderate Republican in a lot of places. Like they go hunting, they carry guns, they're guns rights people. They are all these. You and I've talked before about, how if Democrats want to have a president, they should pick somebody from that area because it really aligns more with the center of the country. So I think that's that poses a big problem. I don't know what they do, and I don't know how they stop it. The president has made a move to call Tim Waltz and calm things down, and talk about what we talked about yesterday about our experience in the military, because I think it would be interesting for people to see what happens here and how strong it is that they want to get budgets passed. Because you and I are both of the thought that if this was a military thing that was happening right now, chain of commands are getting fired. Like this isn't a discussion in the military about Stephen Miller and Christy Nome, and they did get rid of the border king at large, but that's not even a discussion in most places that have this kind of power and are doing this. This is like this person did it. Who's their boss? Their boss. Their boss. You're all out.
Yeah, and I've been talking to military buddies about this. We're frustrated that in the Army we're held to one standard, and then you see this kind of thing happen with federal agents, and there's just people covering for each other, and it's like, no, that's not what we would do. If there's something bad that happens, somebody's held responsible, and that's okay, because that's how we show accountability to our fellow citizens. That military action, law enforcement action, we're all accountable to the rule of law. I think it seems like today there's going to be a little bit of de-escalation from the administration. Now, it sounds like the border guy was kind of removed and put somewhere else, to placate people somewhat. But I think there'll be a somewhat of a withdrawal from that situation rather than trying to inflame it further. Whether that's enough to get the budget passed, probably not, right? There probably going to have to be some real concessions made. And do we? This is all short term. Again, I don't bring this up because it's a long term concern for certainly the stock market. There might be a few rough days in the next week as there's uncertainty over how long this will last and what will happen. I do worry a little bit about our bond market. We keep the acting like our government doesn't have its stuff together and can't pass a budget to pay its bills, just creates doubt and uncertainty that investors demand a risk premium for. And I looked it up. A year ago, the 10-year treasury was 4.55. We had 0.75% rate cuts from the Fed. Now that's on the overnight rate, but it only moved the 10-year treasury to today 0.3% lower, right? So the treasury today is 4.25 basically. And so part of that is because over that period of time, the way investors assess risk on, risks for inflation, risks for government operations, they're saying, we're not giving you the full discount you got. We're going to give you a little bit of a discount with those Fed rates, but we demand some risk premium for this thing.
Yeah, I'm not worried about the long term, and I sit on your investment committee. It's not You're not going to get me saying, Matt, we need to make these wholesale changes. But I think people do have to be. So there's a difference, on long term money. This will be a blip on the radar. I think we are going to have to
Yeah.
look possibly at some things in the bucketing strategies we use, and I'll give you a couple of examples. It's wild. Like American Airlines, the lagging effect from the last government shutdown, they missed earnings pretty bad. And the CEO was on TV today going, man, we have major hubs around DC, government travel. Like it affected them. And it may sound weird, but I'm sitting here in Florida. You got hit with a storm that you're not used to getting hit there. It affected 200 million people. Flights were canceled. Like there's a pretty big revenue hit to companies out there over a 2 or 3 day period that is big. And it might affect some different earnings reports and all, but I don't think it's a long-term thing. But I would say to
Yeah.
investors, and you and I have our eyes on it, like we'll look at those buckets and we may make it's less of an adjustment to the investment and more of an adjustment to where we'll put their money, right? So
Hmm.
if for people out there that aren't doing this, like you and I typically build systems where there's three buckets. There's kind of a long term, midterm, short term, and there may be some clients that we look at over the next couple of months, particularly if the government shutdown comes through, and go, okay, we need to put a little bit more in bucket one, um, that is safe, that it's more interest rate sensitive, and nothing that's happening on this is gonna make that happen. I think, again, it'll be short term and short lived. And I don't think there is anything that can be done to your point, to quell it. Like, I think it was a strong statement by the president, by the way. I'm not sure everybody's aware. Like, not only did he put his guy Tom Homan up there, who is a former ICE guy and is pretty strong handed, but not this kind of strong hand. But he basically said, "You report to me, not to Christy Nome." That's a
Hmm.
that's a stronger message than we may be given credit for. When the president of the United States says, "The person who's really your boss, I'm going to publicly tell them and the world they're not your boss on this anymore. It comes directly to me."
Yeah. Yeah. She certainly looks like she's being cut out of the loop. Maybe hung out, to pasture, which
Hmm.
is what it is. That's what
That's right.
happens. And that's not just a this administration thing. That is
Always.
anywhere in government. If you're no longer useful, if the optics are bad, you're probably gone. I would say part of this, right? So part of uncertainty in the market, uh, whether it was related to the Greenland thing or related to government shutdown, we've seen gold do really well. And it is, I am seeing that to some extent it is a safe haven asset, right? It's as treasuries sell off, the yield goes up. Um, Gold is going up as well. And it's a place that people are saying, I don't know if I want to put money into these treasuries when times are confusing or chaotic. I'm going to put my money in gold. And that's not just individual people,
Yeah.
it's central banks, right? Central banks are buying this up. Had a conversation the other day about silver with some folks. Silver is that quasi, it's a store of value, kind of like gold, but it's less so. It's more involved with industrial. It's in photovoltaics and in some EVs and chips. It's like it has industrial use, so that demand for it is continuing. Meanwhile, either central banks or investors are saying, oh, and also I want some of it, which just drives that price higher too. So yeah, that kind of gets back to this question of, we're a long way from not being the reserve currency, but little things like, oh, there's a market volatility and uncertainty and dollars aren't rushing into treasuries. There's some flows to gold or silver, not just treasuries, is interesting to watch. And like we're incorporated that into portfolios.
Yeah, and I love that you're doing that. I will say that, I think, gold forever was something that, if you looked at it long term, it kind of just looked like cash, right? I mean, it was definitely that. In the short term, it had, some strength to it, but right now, it really is having some strength, and it might be it. Well, I'm not going to dispute what you're saying, so I don't want to make it sound like I am. But it's likely to be what you're saying, that somebody's sitting there and going, I'm not sure I want to put money in a U.S. Treasury. Gold is universal, right? So I'm actually just kind of hedging against the hedge, and we're not there yet. But long term, that's what you do look at. Like, we can be the world's reserve currency. It still doesn't mean anything if people don't want to buy U.S. Treasuries, because we're addicted to debt in this country.
Mm-hmm.
And so if people don't want to buy it, or you're buying it, I mean, I was a different, 5, 6 years ago, I was actually standing on soapboxes, so to speak, saying, my God, like 30-year treasuries they're paying like 1.4. We should borrow $4 trillion and redo our entire infrastructure. We should borrow as much money as people are willing to give us at this ridiculously low rate. Now that's not so much. So now when we want to
Yeah.
do some of these things, we can control, on one hand, the Fed can do whatever they want on interest rates. There still has to be people on the other side of the world going, that's where I want to put my money. That's where I want to put this pension fund. And more important, that's where I want to put our countries. Other countries invest in treasuries. These are the things that they do. And US pension funds invest in treasuries, but pension fund consultants are held to, you have to get the right return. And so if they can't get it, there's other things they're going to put it in there, or these things become underfunded, and they face all kinds of legalities on things like that.
Yeah, and there's we are certainly in an interesting time where, whether it's in the next 10 years or so, crypto is so, it has made it mainstream. It is no longer a fringe activity. Investing in crypto is out there. And along with crypto, so crypto is just a term for any, currency on a blockchain, and that, involves Bitcoin, but the world's larger than just that. Then you get into, I kind of went down a rabbit hole last week looking into, if we're worried about this, what is an alternative? Because the reason the US dollar is the reserve currency is because of the deep liquidity that it has. It's a stable currency, and people will, in transactions, right? If you're Brazil selling something to India, you might convert to dollars to execute that transaction. That, India company receives dollars and they convert it back to their currency. So just the fact that those dollars were needed is why there's so many US dollars out there in the world. But crypto could do that instantaneously without a middleman, the US dollar. So that gets into, is that also a threat in the idea of central bank coins or other US dollar related things, right? So it's just a very interesting world to say, is there a threat from both new technologies? Not to say like Bitcoin is that transaction, but a stable basically a central bank currency that's instantaneously settled without going through a bunch of offices and hands touching it. It could be in the next 10 years. Does that hurt the US dollars? Does that hurt the US Treasury market? Well, if we can tie a stable coin to those things, no, because those are still dollars transacting around the world. It's just an interesting thing that's coming up. That's not a this year issue, but it is out there on the horizon.
Yeah, it's hard because that there's got to be some things that come around that, but there certainly would be an appetite for the rest of the world democratizing monetary policy, right?
Mm-hmm.
And getting closer to something like that. I know you're suggesting that you could do it internally, but there's something out there. I mean, I don't know. Everybody's think is still afraid of hacks and technology and things like that, but I think that the last word has not been said on that for sure.
Yeah.
On how we're going to do cryptocurrency, how that's going to be put in here. And like you said, I mean, it was fringe less than 2 years ago, really, right? And now it's mainstream. It's so mainstream. It's, you open your CNBC app and there's the crypto, and it always starts with, Bitcoin. And, it's just out there. It's omnipresent. ETFs are out there. They are starting to regulate these things. And by the way, we're seeing, if you think about something, I don't know, this may be just short term, but there'd be something to be said for, Bitcoin had a pretty precipitous drop, 3-4 months ago, and it's kind of stabilized. And you wonder if that's been kind of the changing of the guard, as they've kind of put some things in the more mainstream it got, that you start to see less of the volatility. And it's really the only thing that, I shouldn't say it's the only thing, it's one of the things that have really held it up, was this extreme volatility. If you think about cryptocurrency versus currencies like the dollar, the yen, the euro, where it's this big.
Yeah.
And if that stabilizes, and maybe we just saw that over the last 3 or 4 months, where it was at, I don't know, it was at 125 and then it was at 85, but it's, last I checked, it's in that 100 range now, and a little bit closer to what a currency should do, of one that would be considered reliable.
Yeah, I definitely don't think it will be, Bitcoin that is a global transactable currency, but just the technology exists for those things. And this does come to, like, again, we're in competition with China. We want our system being used more widely than their system. We want to be a more reliable partner and be incentivizing people to use US dollars and invest in our markets. And if that means a next generation of technology, we want to be part of owning that and controlling it, as opposed to them creating a alternate money system, right? That's not what we want. And again, China on its own is not a reliable currency for people to do large scale transactions in, and they don't. It's not a liquid free floating currency, and so it's not used.
Well, I'll also say this, and this will be my closing thought, and that'll last for yours. Um, I'm not sure everybody always ever realizes how big the U.S. economy is compared to everybody else. Like we are
Mm-hmm.
ridiculously big. Like
Yep.
everybody thinks China and us are the same size. It's like the entire European Union would match up against the U.S. But if you just took countries, you could take China and 8 other big countries, and they still wouldn't have the size that we have. We just want to maintain that. So, what are your
Yeah.
closing thoughts today? And are there any thoughts on what you have that we're going to talk about our next time?
Yeah. I think as we think of some of the turmoil, whether it's international politics or domestic politics, that leads us to saying we want some diversification. We do. We've increased the amount of European and international investments that we hold because of those risks of relationships fraying and dollars moving elsewhere. Well, if that happens, we want to protect portfolios and participate in that movement. Same thing with if there's concerns with US treasuries, we'll probably want a little gold. And so building portfolios in that way is where we're focused. And I think that the international markets did really well last year relative to the US. First time in a long time. Think that they're going to continue to do pretty well with a lot of European spending, defense spending this year that they'll sustain. So that's kind of like these things are all related when it comes to investments, and we're just keeping our eye and allocating appropriately.
So that was going to be my last thought, but I have to add, I think you've done a great job, with our clients and leading that in investments. And we're not a knee jerk and trying to maximize, returns at maximum risk. But under your leadership, we moved into international when we weren't in it with pretty good timing, right? And I think it is important that we're keeping a good eye on it. And I certainly appreciate your leadership from our team on investments. So with that being said, that's plain talk for today, and we'll see you again in a couple weeks. As always, feel free to reach out to us, ask us what topics you might want to talk about, any questions you would have, and also click and subscribe to our YouTube channel so that we can get the message out to more people. Thank you.